Hi, Jonathan York, Bay Financial Partners, look at the investment markets. Latest inflation data coming out of the US was just a tad hotter than expected. Headline came in at 2.7 versus 2.6 expected. Core was in line at 2.9. But if you look at it, they were both slightly higher than previous readings, 2.4 on the headline and 2.8 on the core. So for all Trump's rhetoric about he's got zero inflation, that's clearly not the case. You know, the Fed's target is sort of 2%. Both of those readings are clearly well above that. And, you know, given that, it's hard for the Fed to cut interest rates at present, especially given the uncertainty read tariffs and trade policy. But Trump, of course, wants lower rates to try and reduce the cost of borrowing after his big beautiful bill that will increase the deficit. Now, US rates sort of nudging up a little bit. The 10-year is back nearly at 4.5 at 4.49. The 30-year is above 5% now at 5.02, and the 2-year is just below 4% at 3.98. Also as well, quite interesting that tourist numbers are falling in the US. And that appears to be a direct correlation between sort of tourists coming into the US and disagreeing with Trump's policies. Now the other big issue is obviously the sort of tariffs. You know, he's pushed those back until the sort of August the 1st. But again, you know, he's come out with a 50% tariff now on Brazil, which his advisors are finding it very hard to justify because the US actually has a trade surplus with Brazil. So a lot of these tariffs were introduced because the US had trade deficits with these countries. But Trump also came out and said that part of the reason for the tariff with Brazil was because of the ongoing persecution of Bolsonaro, who is a very keen supporter of Trump and was the ex-PM of Brazil. You know, Trump's come out to try and justify the tariffs and the sort of mathematics behind it and the formulas behind it, and he came out and actually said that they're based on clear common sense formulas. Now, it's hard to equate that when you're applying the tariff on the basis of, say, the prosecution of Bolsonaro. There's no mathematical formula behind that. Trump also appears to be getting sort of fed up with Putin, and is finally sort of coming to the conclusion that Putin's just been sort of playing him along. And it's giving them 50 days now to sort out a ceasefire. Whether that will happen, we don't know. Indeed, it will be interesting on August the 1st to see what happens with tariffs. So apparently he keeps on continuing to send out letters, so it looks like very few deals have actually been done. Now on the earnings side, they sort of started this week, and certainly JP and Citi were pretty good. They would sort of beat their estimates. Quite a few of the other financials report this week. Also Netflix as well. Now, as much as the actual earnings reports coming through, the guidance will be very important because it looks like tariffs are starting to have an impact on inflation. Indeed, interesting that in the month of June, the US government was in surplus by around $27 billion. That just happens to be the figure that was raised by tariffs, which is all paid by either the US consumer or US companies. And it's certainly not the exporters that are paying the tariffs. The Epstein files as well are still causing Trump a lot of hassle out there, and he really just appears to be sort of digging the hole deeper. Now oil's come back to 66.70 and change. You know, it is quite interesting as well. You know, Trump still keeps bragging about the fact that gasoline in the US is below $2 a gallon. The average price in the US is around $3.14. Weaker data coming out of the UK. GDP actually fell 0.1 for the previous month. And indeed, the Bank of England governor now, Andrew Bailey, has come out and said that, you know, the UK economy is still pretty sluggish and jobs sort of increasing out there, the unemployment. It looks like the bank may have to cut interest rates more aggressively. And the EU just really waiting for August the 1st, 30% tariffs on EU goods going into the US. And that could have some major implications for global trade. Because the US-EU sort of trading partnership accounts for around sort of 25-30% of global trade. Now in Australia, after the Reserve Bank left rates on hold, you know, it does appear that August is pretty much nailed in now for a rate cut. Because inflation appears to be under control, and the Australian economy is sort of pushing along at an okay rate, but could really do with a further little boost out there. Although they are getting a little bit of a boost out there from the British Lions tour, which is certainly bringing quite a few tourists into the Australian economy. Now here in New Zealand, again, the Reserve Bank left rates on hold, and again, it looks like August is now nailed on for a rate cut, and potentially a further one in October as well. The economy is still pretty sluggish out there, and really does need a little bit of a boost. And indeed, there is talk now that the OCR could go down as low as 2.5%. Currently, it's 3.25. Because although the latest card spending was up a little bit, if you actually look at the breakdown on where the spending was, you know, a lot of it was on groceries, and you know, butter, as I say, has increased nearly 50% over the last sort of 12 months. Housing market in certain areas appears to be stalling a little bit as well. Although on the plus side for the housing market, a lot of mortgages will get reset in the next sort of 3 to 6 months at substantially lower rates. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.